Hey everyone, welcome back to Corporate Decoder. Today we're diving into KeyCorp's latest quarterly report, and let me tell you, it's less of a blockbuster and more of a very detailed spreadsheet. Buckle up, because we're about to decode some corporate finance, and this report says they earned $370 million. We'll get to what that means in simple terms, what they think for the rest of the year, and most importantly, what are the risks. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Join for even more insights. This is a Form 10Q, a quarterly report that publicly traded companies like KeyCorp have to file with the Securities and Exchange Commission, or SEC. Think of it as a checkup to make sure companies are being transparent with their investors. This one is for the period ending March 31, 2025. KeyCorp is a large financial services company and its stock trades under the ticker symbol K. Their main office is in Cleveland, Ohio. Basically, this is their contact information for the SEC, nothing much to see here. As of May 2, 2025, they had over 1 billion shares of common stock outstanding, specifically 1,095,942,434 shares. That is a lot of shares, and it shows that it's a lot of shares, and it shows that it's a pretty liquid stock to trade. KeyCorp is highlighting a few key points for this quarter. First, their customer relationships are strong, with a 4% increase in client deposits. They're also managing risk well with net charge-offs. Think of these as bad debts, remaining at the low end of their target range. Their investment banking business also had a record quarter. Looking ahead, KeyCorp is giving us some guidance for the full year 2025. They expect average loans to decrease by 2% to 4%, but commercial loans should rise 2% to 4%. Net interest income, which is the difference between what they earn on loans and pay on deposits, is expected to increase by around 20%. It will be interesting to see at the end of the year if they manage to meet this target. Let's dive into some key numbers from their balance sheet. It shows that their average commercial and industrial loans were around $53.7 billion, with an interest rate of 6.04%. Real estate commercial mortgages averaged $13 billion with a 5.96% interest. All in all, average total loans amount to $104 amount to the loan. The other side, money market deposits average $42 billion at a cost of 2.65%. And demand deposits average $57.4 billion with a cost of 2.19%. Let's switch over to non-interest income and fees. They're investment banking and debt placement fees, meaning fees they get from helping companies raise money, hit $175 million. All these increases help KeyCorp get closer to that 20% income growth this year. Where did that money go? KeyCorp's biggest expense is personnel, coming in at $680 million for the quarter. And this lines up with the company saying that general salary expense stemmed from increased headcount. And on the plus side, non-personnel expenses were down almost 4%, mostly because of a one-time FDIC special assessment charge in 2024. The November 16, 2023, the November 16, 2023, the November 16, 2023, the FDIC, or Federal Deposit Insurance Corporation, issued a final rule to impose a special assessment on IDIs to recover the loss to the NF resulting from the use of the systemic risk exception to protect the uninsured depositors of SVB and Signature. Banks are heavily regulated, so let's talk about capital requirements. KeyCorp has to maintain certain capital ratios to ensure they can withstand financial stress. Was estimated to be 11.78%, which is well above the minimum regulatory requirement of 7.60%. This indicates that KeyCorp has a substantial capital cushion and can support existing and prospective clients. Let's look at their commercial real estate loans. These make up a big chunk of their portfolio. The report breaks down the types of properties they lend to. So it makes up almost half of the CRE loans. The next largest are office, retail, and senior housing. This diversification spreads out the risk, so a slump in one area doesn't sink the whole portfolio. Key's consumer loans are primarily in the Northwest and Ohio. They break out their geography. The consumer side, which is useful for understanding where they are most exposed to shifts in consumer behavior and regional economies. The Consumer Financial Protection Bureau, also known as CFPB, has been a thorn in the side for many financial institutions. Here's a recent example. The Dodd-Frank Act required some lenders to collect and report detailed data on small business loans, especially those owned by women and minorities. After a lot of lawsuits, April 3, 2025, the CFPB decided to create a new proposal on this subject. Compliance with this and many other regulations will likely cost them a good amount of money in legal and compliance staff and fees. So now let's take a step back and assess the direction of KeyCorp. Overall, KeyCorp appears to be taking a cautious. While they face some headwinds in terms of loan demand, they are managing their business efficiently. The company's focus on building customer relationships and maintaining strong capital levels positions it well for the future. The biggest risks come from the uncertainty in the broader economy and regulatory changes. However, KeyCorp appears to be taking a cautious and proactive approach to navigate these challenges, maintaining a conservative level of cash. For the average investor, KeyCorp seems like a reasonable investment. It might not be the flashiest stock, but the financials don't seem too bad for now. If you found this analysis helpful, please hit the like button. It really helps. Also, be sure to subscribe for more corporate deep dives. Remember, we've got a Discord community brewing in the description. Come say hi and talk about the business world. See you in the next video.